Hello everyone, welcome back to the channel. In this video also, we will continue the discussion between Jethalal and his CA about accounting process. In the last video, we learned about journal books and how transactions are recorded there. Now in this video, we will discuss about ledger books. In order to explain this in simple words, just imagine that you have maintained your personal diary, and in that diary you record your day-to-day activity. There you have recorded that you have bought 2 chocolates for your friend in exchange of cash from them. Now, suppose you have maintained 3 more diaries where you have recorded your cash spent and earned, and 2 separate diaries for your friends. Now, after recording this incident in your personal diary, you open your cash diary where you record spending of your money in chocolates. And suppose your friend doesn't pay for the chocolate. You will record that incident separately in both the diaries maintained. In future, when you will open your cash diary, you will immediately recollect that you have spent money on chocolates, and once you open your friend's diary, you will recollect that money is receivable from them. Now, this similar purpose ledger serves in the business. Today, suppose a business wants to know what is the balance of cash present in its book, and only journal book is present. You will have to first identify all the transactions where cash was involved, and then you will have to sum total its debit and credit balance to know the position. Hence, by maintaining ledgers, we will simply have to go to cash account ledger and just check the balance present over there. Hope the concept of ledger is clear to you. Over here, you will find the ledger format which is present. It is similar to journal books, where date, account details, amount is common. The only difference is that it has one extra column called journal folio, and this simply marks the entry serial number in journal books. And instead of recording debit and credit together, it has 2 separate columns for the same. That is, one side records all the debit impact and the other side records all the credit impact. Now we will record the entries passed in journal books into their corresponding ledger. First entry was recording the receipt of cash into Gara Electronics from Jethalal. Hence over here, 2 ledgers would be created. One will be the cash account and the other the capital account. As you have seen in journal, cash account was debited. Hence, simply in cash book under debit section, 20 lakhs would be recorded. And since to pass this entry capital was created, hence under account column capital is mentioned. Similarly, since capital was credited, over here capital account would record the balance on credit side, and under account column cash will be mentioned. Now since this was a first entry, hence under journal folio column 1 is written to mark that this was the first entry. For simplifying, when we open cash account first of we received money in form of capital, hence simply record capital in debit side with relevant amount and do the vice versa in capital. Next was receiving of loan from ICICI. Cash account is already open. We just need to record the entry on debit side again with relevant amount. And hence, we will open a new ledger with ICICI Bank and pass the corresponding entry. After this, you can see that business has 50 lakhs and 2 sources are visible for it. That is capital and loan along with balance received from each one of them. After that, TV was purchased on credit from LG company, and hence we will simply open 2 ledger accounts. First one is purchase account and the next will be LG company account. And we will record the entries in both of them as you can see on the screen. Next was purchasing of furniture on cash. Over here, simply cash is going out of the business. Hence, amount is mentioned on credit side. And one new ledger is opened in the form of furniture and we will record the amount. Next was Tapu's school fees. Since it is used for personal use, hence drawing account is created and the amount is recorded over there. Drawing account is closed on as and then basis. Hence, capital account is reduced by the amount of drawings. Next was one TV was sold to Mr. Hathi on credit. And hence, this is a credit based business. We will have two more ledgers and the amount will be recorded there as you can see on the screen. Lastly, payment of electricity bill by Jethalal. And in this, simply one new ledger account is opened and the amount is posted. Now after passing all the entries, you will notice that real account, which is of asset nature, will always have more debit balance than credit balance, as it reflects amount which comes inside the business. Just the opposite is for liability nature. It will always reflect credit balance as it reflects the balance which will go out of the business. Also, all the nominal account for which money or any other asset has gone out of business will have a debit balance, reflecting expense nature, and vice versa in case of account of income nature, as money or asset comes inside the business. Also, all personal account that has given something to business, whether cash or asset, will have credit balance, and those who have taken something from business will have a debit balance. In short, if asset comes in, it will have a debit balance and its corresponding nominal or personal account will have credit balance. And if asset goes out of the business, its corresponding nominal or personal account will have debit balance. If we can see in the above example, whenever money was received to business, its corresponding account, whether capital or ICICI Bank, was credited. And whenever money goes out of the business, its corresponding account is debited, like drawing or furniture. Hope this will clear the concept of ledger, and if in case you have any doubt, do write to us in the email ID mentioned in the description below. Do like, share and subscribe for more videos. Thank you.